Everyone. Thank you for joining us. I'm here with quite a impressive panel. My name is Will Coleman. I'll be moderating this, but these gentlemen will be doing all the talking. We'll be discussing transfer agents, their historical role, their current role, and sort of where we see that going in the future as blockchain becomes more and more mainstream. Again, my name is Will Coleman. I'm a director of technology advisory services with Cohen and Company. And I'll let these good folks go through and introduce themselves. I'll start with Josh, just because you're on my top left on my screen.
Great. Good day, everyone. Thanks for joining. My name is Josh McGinn. I'm a senior vice president here at AST Financial, American Stock Transfer. I actually joined the transfer agency industry back on Black Monday in 1987, where a 300-point drop was a cataclysmic impact. So things have significantly changed since then. I started in the Bank of Boston's proxy department, where we would actually be tabulating proxy votes using IBM hole punch card readers. So technology has really advanced since then. While they're at Bank of Boston / Equiserve, I was involved with developing sort of the e-voting, the e-distribution, the householding technology that we actually rolled out. Was involved with basically the internet, basically notice of internet availability and hosting and stuff like that. So glad to join the panel, and basically look towards the old ways versus the new coming ways.
All right. How about you, Jay?
Hi there. Excited to be here. Jay Proffitt, Securitize Markets Chief Operating Officer. Securitize Markets provides the ability for companies and funds to raise in the private exempt market. We also have our digital ATS that's live today with 6 digital security tokens trading on it. Prior to Securitize, I was on the other side of the house, the centralized finance. So I was with Schwab for 12 years, and before that with Pinson, so correspondent clearing. So my role is really around the trading operations components related to securities, and so it's an exciting opportunity to talk to everybody.
Paul?
Well, thank you for the opportunity to join the panel. My name is Paul Conn. I'm the president of Global Capital Markets at Computershare. I've been working in the financial markets for 40 years. You could break that into 2 halves. The first half working for exchanges, and that was broken into 2 halves. Firstly, almost 10 years with the London Stock Exchange, and then almost 10 years with the Australian Stock Exchange, always working on kind of electronification, reform, particularly reform of post-trade settlement. I then joined Computershare in Sydney in '98 and relocated to New York in 2001. I've led the blockchain initiatives at Computershare since about 2016, and I've kind of broad role in the markets, everything from kind of strategy to policy, product development, and operations. So pleased to be here with this fine panel.
And last but definitely not least, Dave.
Hey, Will. Great to be here. Again, thanks to Arca for putting this on. My name is Dave Hendricks. I'm the CEO and founder of Vertalo. We're a digital transfer agent. Josh, I actually got my start in the markets in 1987 as well. The only problem was I was an options trader, and I'll tell you that I'm a big fan of electronic, digital, etc. On that fateful day, I was working for a hedge fund trading options on the S&P 100, and I could not close some naked puts, and it was pretty painful. And I went on to work at Arthur Andersen, the accounting firm, for anyone who's old enough to remember them. And I cut my teeth there, securitizing credit instruments, and then real estate. I worked on securitizing real estate in the RTC kind of S&L crisis in the mid-90s. Vertalo, we originally were an issuer, and that's kind of how we found this problem. We issued a digital asset security. We started in October of 2017, and we created our own smart contract, and we had to issue our digital asset securities, these security tokens, to our investors. And we found that the process of transferring those tokenized assets to individual wallets to be both very difficult and also very scary because of the problems with fat finger and blockchain addresses. So after we did our offering, which was a spectacular failure from a fundraising perspective, we did learn something very important, and that is that investors in digital asset securities are interested in secure ownership, and issuers of digital asset securities, of which we were one, need a platform to manage the issuance and custody and just general overall investor relations around digital asset securities. And so we pivoted the company in May of 2018, and now we're a SEC registered transfer agent with more than 50 customers and working on this problem. It's a very, very exciting area and not boring at all.
Terrific. I appreciate the introduction from everybody. Just to start off, just because there have been people coming with different backgrounds who may be listening to this panel, I'm going to go to Paul. Can you kind of give everyone a background on why transfer agents are important, what problem they solved, kind of why they came to be, in this space?
Did you give that to me because I'm the oldest person on the panel?
Well, no, that in the discussion we had yesterday.
Okay, no, fair enough. Okay, so a transfer agent is an agent of the issuer keeping the legal book and record of ownership. Traditionally, that has been carried out through the form of paper share certificates. For the last 20 years, paper has been gradually taken out of the system with the advent of the direct registration system, which allows records to be held on issuers' books through electronic accounts and statements. And yes, they're responsible for recording changes of ownership, distributing investor communications, running shareholder meetings, counting proxies, processing corporate reorganizations. And that's a really interesting area when you start talking about digital securities, because everyone thinks you put an asset on a ledger and that's kind of the end of it. Well, it's actually just the start of it. But that's what a transfer agent does. Public companies must have a transfer agent. Transfer agents are regulated by the SEC and some other state regulators, so it's an important function. It's a key part of public market infrastructure. Maybe I'll just leave it there.
Oh, and they also provide some assurance that the number of stock that are being traded match something near or approximately what has actually been issued, and prevent that sort of risk. Is there anybody else want to comment on this particular?
Yeah, so this is Josh McGinn from AST. I'll mention that. It's kind of, as Paul mentioned, it is the responsibility of the issuer to basically maintain their own cap table, their stock records. Over the years, there have been many different requirements and regulations that they've had to abide by. So it became very onerous for an individual company to be able to be linked into all these various entities and do the reporting and such. So that's kind of why they've sort of outsourced it to a transfer agent. I mean, I remember one of the requirements was that if you were listed on the New York Stock Exchange, you had to have a window or an office south of I think it was Chambers Street. Now that rule's been revoked since then. But it just, if you're an issuer trying to think of all the various SEC regulations, the IRS regulations, the Office of Controller of Currency, you've got the state. We're regulated by the Department of Financial Services there in New York. And then you've got the individual state jurisdictions as well that are looking for abandoned property. So it really has sort of become very, very onerous, and you need an expert, with economies of scale and scope to be able to provide that for the issuer.
Okay. I think that sets reasonable context. So, hey, Dave, I'm gonna start out, bugging you right off the back and say, hey, how does a TA in digital world, with digital assets, fundamentally differ from the role that's been there before, or operationally, how do they differ?
I'm not sure that it's fundamentally different. I would say it's probably evolutionary versus the existing transfer agents. for one, a lot of the transfer agents, and you heard from some of them on previous panel. We issue the shares, first of all, and we work very closely with the issuers to produce the actual security and distribute it to wallets or other accounts. That's certainly one thing we do. I think one of the most interesting things that the transfer agents do now, the digital ones, is they act as glue in the system. And dealing with digital asset security, especially you've got some which are issued to self-sovereign wallets and some which are managed in custody. It's much more of a systems integration function than it might have been in the past. So it's less paper-based and more integrative, and I think also probably because of the speed that digital assets, the way they move, the speed of light, they have less latency and less tolerance for latency in the process. So I think it's again an augmentation rather than a replacement of the other function. And we do fewer things, frankly, than maybe traditional transfer agents do. So it kind of changed the role.
Jay, you had a comment?
Yeah, I was going to I agree with Dave that it's definitely an evolution. At Securitize, we also issue what we call tokenize as well. We have over 200 clients on our US platform and over 100,000 investors within our TA. So it's definitely, and I'm probably the newest to the whole TA. I've actually grew up on the broker dealer side of the house. But I think what I've seen in just my short amount of time being working around the TA, it's kind of this TA 2.0, or it's kind of a comeback for the transfer agent with the SEC's kind of letter around digital securities. It's really interesting how the transfer agent now is going to play a much more prominent role in this evolution of digital securities.
I mean, can I respond to this? Because this is great, because it almost sounds like we're drawing a real hard line between new and old. And
exactly.
I mean, that is just absolute BS, right? Because transfer agents have been the control point for decades. Like, you talk to someone from the commission, this is the reason you have transfer agents. So we can debate the form and process about how assets are created, how they're issued, liquidity of markets. But let's be fair here. We're all talking about the same function, the same control processes, and we all adapt to different environments. I mean, we put tokens on ledgers. It doesn't mean that, we're a TradFi organization. But anyway, I look forward to the conversation, Will, as we work through this.
I think Paul doth protest too much.
Not really. We love competition. That
would be called a false dichotomy, Paul.
Yeah. Okay. Let's go.
But I appreciate the conflict. It's fun to have. So.
Well, it's not really, because we do both. So you're trying to say that traditional transfer agents can't process digital securities. It's just wrong. In fact, that's what I'm trying to clear up right at the outset.
I'm not sure.
All right. Well, so all right, guys. So what's the? Let's talk about the advantages, right? So we're saying, all right. So who can do what job? But what are the advantages if you have, somebody of integrating blockchain technology with this function? Right. What are the advantages? And Jay, go ahead and I'll let you kind of hop on that if you're willing. Sure.
So I think that with the evolution of blockchain technology. I think it's one of the things where investors, at least the early adopters of this technology, they see advantages of owning those or, custodying those assets themselves. So in their own digital wallet. I think that's probably one component that is an advantage for investors that, that see risks associated with centralized finance, right? Like, that's the whole kind of what I think. Myself, I grew up in centralized, so I have a conflicting view. I see the pros and cons to both. There's pros to DeFi and there's some cons as well. And I think the cons are really just because it's such a nascent technology and that there's stuff that's being worked out, right? It's so new. We're typically, when anything technology is so new, what do you always see is all the negative kind of reporting around that new technology. So, but there's so much tremendous opportunity at the same time that people don't understand. That I think is a part of, like, this conference is a great example. getting more education out there, and really helping folks understand, what are the advantages and pros and cons associated with digital security tokens.
Yeah.
Okay,
And
so
this is Josh from Tracy. I'd like to add that, we have our own private company cap table solution called Estrella, and they actually use blockchain technology. They call it the genealogy of the share. So what is really valued by the attorneys is at the time that the company is getting ready for the IPO, they're looking at the cap table, and they've got to do their due diligence on all the shares. Have these shares been issued, more than a year and a day? When are they going to be exempt from registration? Were they issued out of a compensation plan? And so the attorneys that are actually reviewing the Estrella records with this genealogy can actually say, okay, what's the history of this 10,000 share lot that's in a trust account? Instead of having to go back to the company and say, hey, could you pull a hat box from the issuance date on this record, back in 2008, they can actually just drill in and say, oh, this trust account actually was transferred in 2008 from a joint account. I see the joint account was actually transferred from 2005 from an option issuance in the individual shareholder's name. So it really does provide a lot of additional benefit and efficiencies, overall.
So if I'm going to go to you, Dave, here just in a second, because I think that one of the things is here, we're sort of all saying, all right, fine, technology can improve this process. We all agree that we want to move, paper is not the ultimate solution, but really it becomes whether or not we're talking about centralized finance, as Jay said, or centralized management of a distributed system. I know, Dave, you've got some opinions on the distributed versus centralized.
Well, certainly a distributed system, using distributed ledger node-based confirmations, you've got a record that transaction was confirmed that not by a single entity. Okay, any manual entry of any action performed by humans is subject to fat finger, fumble errors, etc. During the COVID thing, the Securities Token Association and DTCC and everybody else actually suspended the transference and processing of paper securities. Yeah. So, that would have been a really, really nice time to have a lot of this infrastructure built. And, anytime you're relying on humans to go to an office below Chambers Street to move papers around, that's a real problem. Hey, now listen, another thing. What my co-founder Gautam, who you'll hear on another call later on today, had to fix the problem created by the collapse of World Trade Center building number 7, which was filled with paper certificates. And that entire history had to be recreated. It took quite a bit of time. One other thing, though. Here's a paper certificate, okay? This is very hard to fractionalize, okay? That just makes it into trash, okay? The ability to fractionalize, a holding down to multiple decimal points and also program it so that part of that holding can be sold during a certain time or a certain window by itself, or can be transferred without the notion of a medallion or something like that. It's just a step function improvement on the use of paper as a representation of ownership, and you can not only prohibit, but you can enable transfer, and as well as other things related to fractionalization. So I think there's a lot of. I mean, we could go on for an hour on that.
And we really should. So, Will, just to respond to this, paper certificates have been taken out of the system progressively for 20 years, right?
I still have them.
But no one's denying that, right?
Yeah.
No one's denying that. But by the same token, we don't have a DeFi system that controls all the liquidity in the world, right? We've got new product markets that are being created, and blockchain is a very, very important part of how they're evolving. We also have traditional finance with trillions of dollars of liquidity. Like, we can't ignore that. So these markets are going to operate side by side, and they're going to progressively converge over a period of time. In my view, that's what's going to happen. We're not going to lose all of our business to Jay overnight. We're going to sit there idly with green eye shades and piece of paper, a medallion. Of course we're not. Come on. So, we do put securities on ledgers today. We did the Overstock digital security in 2016. We integrate to T0. We integrate to a Tezos blockchain. So Yeah, let's just draw a line between the old and the new, and let's talk about what the role of an issuer agent is and why.
All right, so what are the
disadvantages here, man? You should be having fun with this. Look at us.
I am having fun with it.
We're nothing to you.
All right. So all right. So I get that we all agree that technology is good. We need to move forward. You know who implements it is up for debate and discussion, and the markets will figure that out. But obviously, it's not all roses, right? Like not everything is all good all the time, right? There's always drawbacks with new technologies. Computers let you make bigger, faster mistakes, right? So what are the drawbacks, right? Is there any negative, or is this all just perfect world stuff?
I can start if you want. I mean, I
sure. Go ahead, Jack.
So I've dealt with retail most of my career. Part of it B2B, but most of it in retail. And I always do what I call the mom test. How would my mom? She invests in the stock market. She wants to buy, something, and then we were here for Thanksgiving. She's like, "Tell me what you do." I told her. It went over her head. So I think from my perspective, for the mass adoption of this technology. There's a lot of education that needs to occur. There's this form with Arca's putting on is awesome because when I try to explain my mom a digital wallet and how it works and how it functions, this is to me that's the kind of the friction or the barrier that you're up against in this mass adoption is just the regular everyday user who has grown up with traditional finance, have logged into their Fidelity, TD, Schwab accounts, and it's all there, and they don't have to worry about it. Versus they have to now kind of manage this wallet, right? Like they have much more control over the custody of their assets. And I think and I agree with Paul, I think this is a convergence over time, is that I think certain groups are just going to ignore it and they're going to keep the traditional side. But I think as we look down the path, like skating towards the puck, as somebody said on an earlier call, this is where it's going. The puck is going in this direction, but it's a matter of time. And I agree with, I think it was Rain from Arca was saying we're early innings. I agree with that as well. Like, we're from my view, first or second inning associated with blockchain and digital security tokens.
Which means we've got 7 innings to catch up and do the right thing. But just on this point, and I'm sorry for being flippant there, but I think that little exchange, from my perspective, speaks to how we see these market segments evolving. It isn't a binary outcome where all of a sudden we come to work on the morning and we've all got tokens, we're all working, in these digital spaces. They will compete and they will converge over time, and they'll learn from one another. But there is an important function to be the gatekeeper, the controller of the capital that goes on the ledger, and no one should be any doubt of that. We should all agree that that is an important function. I would hope we'd all agree, at least for the foreseeable future, that not all transfer agent functions can be bundled into smart contracts, right? So that would be a good thing for people in the audience to understand, because I'm sure there's lots of people out there who say, well, why do we even have this? It's just smart contract the whole function away. Like, why aren't we talking about the end-to-end experience and why we can't clear and settle transactions? Why aren't all of these liquidity pools connected to our ledgers that we operate?
Yeah, those are definitely critical issues, and unfortunately largely out of the purview or control of the folks who are on this panel, because that's happening at ATSs and exchanges. I want to go back to something that Jay said before. One of the biggest impediments to the adoption of digital asset securities is the technological hurdle posed to the investor. The most important thing that builders in this space can do is to not make things which look different or feel different, but have enhanced capabilities. Wallets are the province of sophisticated investors today. The reason why DeFi is going to be where DeFi is right now is because it's very, very hard to be a yield farmer. Private keys are painful and people lose them. And that's why, 3 years ago, we moved away from a focus on self-sovereign wallets, which we thought had AML and UI UX issues. And we moved to keyless custodial wallets so that it would look exactly like the brokerage experience that people are dealing with. You can't ask, why aren't there more investors in digital asset securities? Well, because normals are afraid of losing their securities, and they should be. And also, self-sovereign wallets are public. Anyone who thinks that that what they hold in their Ethereum wallet is private doesn't know anything about blockchain. And so, why would you want to disclose your position? One of the great things about transfer agents is they also are a privacy function. I can't go to AST and see what Joshua owns, or Computershare and see what Paul owns. It's none of my business. The exposure of holdings in self-sovereign wallets is a bug. It's not a feature. In order to get people to adopt, you've got to follow the principles that Paul was talking about. First of all, you've got stewardship. Okay, that prime feature. Stewardship, control, security, but then you've got to have privacy and safety as well, and it's very, very hard to do that using the DeFi kind of modality.
Well, aren't there issues? I mean, in both cases, we've kind of keep going back to interoperability, right? And one of the things that I've noticed is so I'm old also, like one or two of the other folks on the panel, but when there was the dawning of the internet. Nobody was interested, right? Nobody cared. Nobody knew what it was. There were a few machines hooked up at universities, but because of that, nobody was trying to get a competitive advantage based on implementing some proprietary protocol, right? Everything was done on a request for comment basis to create standards, right? RFCs. So then you saw problems with interoperability of web browsers when Microsoft, for example, came in and said, "Hey, we don't. If that becomes standard, right? Who cares what OS you're running? So we need to keep these things separate. We need to have different functionality." So how do you get standards for these data exchanges, right? Because somebody's going to see it as a disadvantage that they're going to be the big player on the block, and they don't want everybody else using the same standard. Or do you think it will? How is that going to happen?
That's a really good question. I'm going to go back to my experience back in 2011 when the U.S. Treasury Department enacted a regulation of cost basis reporting. You've got hundreds of different brokers operating on their own proprietary platforms, and how do you sort of get standardized data for brokers to share among brokers, to transfer agents, to trustees, to custodians, to be able to convey that underlying cost basis information? People wouldn't want to do it themselves. They wouldn't want to basically expend the developmental cost on that until it was regulated. So, I mean, we're talking about, the DFI and many different, systems there. It's like, how do you bring them all together so they all speak the same language? They all have the same data elements to that aspect. I think I hate to say it, but it usually will come out as a result of forced regulation.
Well, I mean, I'd like to have a go at that if that's possible.
Yeah, please.
I don't think it's possible to talk about standards or standard processes without talking about how the different parts of the market interact, right? It's about connectivity as much as anything else. And adoption is going to come when these markets become more liquid. They will become more liquid when the different operators in the marketplace are connected and connected through standards. I don't believe it has to be centralized. I believe settlement DVP could be an atomic asset swap on two ledgers. I don't think that has to be done through DTC. So I'm not against DeFi. I'm not against assets being on ledgers. I think there has to be control at the issuer agent function, but we need to actually understand how the issuer agent function interacts with the marketplace. And these are not liquid markets at the moment. So to me, it's all, you can't say, well, that panel, they dealt with ATSs and they probably weren't talking about how do we interact for clearing and settlement purposes. And we can't say, well, we're only talking about issuer agent function. We can't talk about the execution function, because ultimately the back end and the front end need to connect. I mean, it's just,
yeah.
So I mean, so is this panel going to, get together afterwards and set the standard for, data exchange? between all these different
Well,
TAs?
we're actually already doing that in a lot of ways. So there's two ways of looking at moving these securities around. One of them is creating some kind of different smart contract. And by the way, that's a whole topic right there. Different protocols, different smart contracts that need to be parsed differently, held in different wallets. But the fact of the matter is that in any given holding, there's only a couple of pieces of data that are really that important: who owns it and how much they're long, and of course the basis and some other things like that. So the data that you don't even have restrictions on certificates ever, so you can program those in. But it's not really that difficult when we understand and we agree that the information that needs to be traded between a trading venue and a transfer agent is actually a relatively small package of information. And it's a lot to ask all these different trading and clearance platforms to have to parse some kind of rando smart contract that some platform created. It's actually quite a burden for them to be compatible across all these different protocols and smart contract suites. And so, we've chosen to simplify that by using APIs. Maybe in version 3 of the security token ecosystem, self-sovereign wallets will work, and ATSs and exchanges will be able to parse smart contracts. But there has to be some form of standard lexicon, standard language, standard formatting in order for this thing to work. Otherwise, no one's going to use it, and it's all going to break, and the gas costs will be high.
Yeah, if I could just make a quick comment, I was going to say to Josh and Paul were saying, cost basis. I went through that when I was at Schwab. That was a fun project, and I also was the lead on the Reg NMS components as well. And so, my background is a lot around trading, and so I think when you see this year, you will see a public company with a digital security token. And from my perspective, I've been having conversations with my internal counsel and compliance. It's really around Reg NMS, right? So the Reg NMS was all created so that there was all this liquidity, there was routing out, but now you have these islands of digital security tokens and then the public market. Okay, yep. I think it's going to force conversations around, oh gosh, they have that public on a digital. How does that impact the public market? And there's arbitrage opportunity. So I think it's going to force a discussion.
I couldn't agree more. I could not agree more. That's the key issue. We've seen lots of little walled gardens be created, right? And they're great. The technology is good. Everyone's excited by it. But to have a market, a national market, we need the infrastructure to connect, and standards are important to that. We also need to decide what functions and features are really core to that.
Yeah, on the public markets thing, though, I think that's interesting, and certainly, when you enter into the public and more regulated markets, it drives a requirement for standardization for a lot of reasons, and without going into that, digital asset securities, though, are not going to optimize the public markets more than they're already optimized. In fact, probably quite the opposite in the short run. The market that we're focused on, that we think this technology can, the problems that can be addressed by this technology are in the private markets. Private markets have high friction. They don't use transfer agents; they're not required to, and they suffer from near zero liquidity. This technology, digital transfer agency, will open up new markets for everybody here. There's so much opportunity that none of us have to worry about slicing the pie into smaller pieces. And the things that Paul and Joshua have been doing for decades, largely applied to the public markets. What we have,
please, Dave, stop that, please.
Largely been applied to public markets. In the United States, there's no requirement, Paul, for a transfer agent. I've been on the issuer side. I'd like running private businesses for a long time.
But that's not the point we're making. It's not to say Josh and I, we have private market businesses. We connect with ledgers.
I have no issue with you. What I'm saying is the problem in private markets is more acute. Okay, and it's a bigger business opportunity for everybody on this call and in this conference than fixing public markets, which are highly optimized.
I agree.
That's it. I'm not sure what.
But I think we're all saying this. I think we're saying the same thing now. If you look at the cost of transacting in the private markets, buyers and sellers are paying 4%, 5%. Why? Because they're not deeply liquid markets. Why? Because there isn't proper market infrastructure. The key players are not properly connected in the same way as they are in the public markets. When we sort that problem out, the private markets are going to grow and become even more vibrant. But we need to have standardization and we need connectivity between the key players.
Yeah, 100% agreement. And it's, by the way, 30% liquidity discount in private markets because of the lack of marketability.
Okay.
So, I mean, there's going to be regulations that are going to impact this, right? Because there's a certain number of people that are like, hey, I don't know which way regulations are going to move. How heavily am I going to commit, right? Either capital to people who are building infrastructure, or, how much attention I'm going to pay until there's clarity. Like, what regulation are we missing? What would smooth the road? What are you guys hoping to see?
I have a personal opinion. I don't know if it
Absolutely. Go ahead.
I don't know if it's directly related to Securitize, but so when I first was hired on last year and I looked at the 3-step process, I just felt I had to read the document like 3 times. I was like, why? It's very confusing why we have a cash custodian and the TA, and then the broker dealer sits in the middle and doesn't do anything except pass messages back and forth. It's like, I'm trying to understand, when can a broker dealer in this space carry cash for the customers? Because what the SEC has recommended is that's separated. What I've been told by, discussions internally is, it's an evolution, right? They're going to start with that, and then we'll start to discuss the ability for the broker dealer to both hold the cash, and then the TA would still be the security custodian. But to me, that was kind of an evolution because it's created this partnership that we have with another entity. Of course, we could become that entity. We could become a trust bank or something else. But it just seems it would be great if the broker dealer, if they could carry the cash component related to essentially the secondary. And I'm speaking about the secondary trading of these things, because that's probably where I'm most focused for myself, my own perspective. So to me, is the evolution of the 3-step process, so that it incorporates the broker dealer can be the cash custodian, and then the TA would be the security custodian.
Okay. I mean, does anybody else have any areas they feel like the regulation could be advanced that would really help the industry?
Yes.
Well, I think, if you look at the 2 main markets, so cash, if you actually put money into a bank account, you're protected up to a certain dollar amount by the FDIC. So investors are protected to a certain point. Same thing when you're talking about publicly traded securities, even private securities, is that the Securities and Exchange Commission is out there looking to protect the investor, and that's why you've got the Securities Act of 33 and the Securities Act of 34 and on all that kind of stuff. So I guess the question is, these digital assets, what regulatory body are they going to fall under? And that's really going to develop what type of regulations are actually, being rolled out, for the investor protection.
So investor protection, that's great. Thank you for that one, Joshua. So as a recovering corporate secretary here, and a guy who's owned a lot of private venture funded shares, people like private companies have no mandate to even use a cap table, any form of anything to hold their shares. They can use cocktail napkins, index cards in a shoebox, and there's no auditing. Most of them are not audited. Requiring private companies to use transfer agents when they get to a certain number of shareholders, and then standardizing this so that the poor employees at these companies don't get ripped off by CEOs and boards, and they know actually what they own. One of the easiest things in the world to do as a private company is to issue options that don't exist and have not been authorized. It's also very easy to sell 150% of your company. And so one of the great things about smart contracts is that you can limit the number of shares that are issued. And also you can retract them, you can put conditions on them, and even in a direct listing example, you can enable programmatic tendering. So the only way, though, by the way, too, you can do know your beneficial owner, which is something which is going to be happening. Very hard to do with, by looking at people's books. A lot easier to do if you have an electronic record. So I'm the last person to ask for more regulation, except for this. I would love to see this because I think it has real societal benefit. Better record keeping, so that for investors and employees and founders and everybody else, it would make a lot of things a lot easier. It doesn't even have to be a very big burden.
So, I mean, if I could just build on that, and Dave, I don't want to sound like I'm standing up for every aspect of the public markets. I think there are some real weaknesses in the public markets and public market infrastructure. That said, I don't think that means that the transfer agent function is a dodo function. So we're gradually honing in on the issue here. I think what is really needed, regulation, we need some consistency between what happens between the private markets and the public markets. And that doesn't mean that you have to lift up the private market in every way to reflect what happens in the private markets for the reasons we've all kind of just outlined. But I do think there needs to be some integration between the infrastructure. You can imagine not that long down the track, we'll see one of these private companies with tokens wanting to acquire a public market company, right? So gradually, we're going to start to see convergence, and we need to all start working together on how to do that. It's not a competitive issue if we all believe that actually the market could be so much bigger than it really is. It is about standardization of process and education and getting effective regulation and consistent regulation. I think that's all I would say. I would love, just on a personal level, this is just a personal note, I think the settlement process between dealers in the private market, the DVP process, is something that could probably be done very effectively through some form of smart contracting arrangement if the issuer agent has the legal books and records of the securities and some trust bank has the cash. But I think there's lots of things that can be done to modernize. It's just about what pace are we going at and who's coming along for the ride.
You could definitely see a tokenized company issuing equity and then using that to buy, for example, American Stock Transfer. And they just go and raise a whole bunch of money. Computershare is pretty big, hard to buy. But yeah, I mean, this is going to happen, and there's going to be an inversion in markets. Absolutely, Paul, you're absolutely right.
Yeah, and just one thing I'd say, what I've seen, being in the centralized finance for so long and coming over to this side, is actually watching instant settlement like really happening. It's like it's amazing. I mean, I'm an ops guy, so I'm a geek, but when you see, they buy and sell and it transacts, they have the cash, they wire it out same day, like within an hour. Like that to me is something that I think is really cool that we'll hopefully start to bring over to the public markets. But one real quick plug for our Securitize ID. So we have a product where I think this is also going to be critical is KYC. So, think about it. In the future, you have your digital wallet. You don't really have an account with a broker dealer, right? I hold all my securities in my account, but as a broker dealer, I have to KYC. So we've come up with what's called Securitize ID. We have over 400,000 users, I should say, on that platform. And it would be awesome, then Dave mentioned it, to create a on-chain component of that KYC, right? That could be shared, which I think is really, really interesting.
Yeah, I mean, obviously, we're starting to come up on time, and I know we could talk about this all day. There haven't been too many questions. Let me see what we have here, because I want to get at least one or two. I'm trying to think of not too specific. All right. Well, let me keep going. One more question real quick before we close this up. But all right. So one of the questions we had on our panel or our list of questions was, hey, do we think that blockchain can make TAs obsolete? And obviously not, right? We've clearly defined that. But what kind of timeline do we think that there will be that these things will consolidate, right? We're saying that, hey, they will, but are we talking 10 years? I mean, before, people said that the retail stores would be all gone, right? In the 90s, they're like, by 2000, there'll be no retail store. Well, there's still a few left, 20 years later. What do you guys think? What's the timeline look like?
I'm happy to have a go at that. I don't think you can put a definitive timeline on it. I think these infrastructures will coexist for a long, long time. And at the moment, deep liquidity is in the public market, supported by public market infrastructure. We've got latent liquidity in private markets, in a range of private markets and a range of digital assets. I think everyone hopes that those digital marketplaces will grow over time. They operate on a different basis, T0, sometimes instant settlement. They are sometimes challenged by the liquidity that the public markets have. The public markets may actually have too much liquidity at times, and that creates other issues, but we haven't got time for that. But I think they're going to coexist. I don't think you can say in 5 years' time there'll be absolute convergence. I think what you might find is this kind of some transfer of scale of business from one model to the other. But I just think these models will compete for a while, and different providers will compete in one or the other or in both. And that's the way I see it. It'll take a long time.
Yeah, I'll agree here with Paul. One of the most interesting things, is kind of a general observation about this conference, and again, thanks to Arca for putting all these different voices together, is that this is one of the only industries that I've ever seen where you've got so many companies that are working together in partnership in parallel to bring massive incremental change. You didn't see this in social media. You never see or search. You didn't see them all going to conferences and talking on panels together and even talking about what they were going to do. But everybody here on this panel and the other panels is really talking about hitting a point in the future. And to Paul's absolutely right. You can't put a time on it because we don't even know what that is. What is that? But we are all moving to making this rational, reliable, usable, efficient, and there's a lot of different ways to skin this. And it's fun. It's a little bit of a tournament, but I think it's a friendlier and more cooperative than that. And it's an ecosystem play ultimately. And that means that people got to work together. It's pretty cool. I love it. I mean, it's a lot of fun. So
yeah, I'd just say that what I found interesting from last year, they were saying that 2021 was the year of NFTs. I actually think that gives us a little tailwind with this adoption, because what we're seeing is many folks are coming in saying, I'm really interested in the security digital token and I wanted some sort of cool NFT. Like they're seeing some convergence around conversations of, I want my security token, but then I want this in it, like a utility token. Like, it's really interesting how they're starting to combine these technologies to come up with this kind of package. And it is for, I think Paul is saying, or I forget who was saying, but large brands with large audiences, right? Like that's where it becomes really interesting. And again, I think that's what we're starting to see having more conversations with those type of folks, because they see the uniqueness that, no one's out there doing this right now. So we want to be the first, or we want to offer this unique thing to our investors. So I think, I don't have a timeline either, but I do see some really good tailwinds coming out of last year.
Yeah.
Josh, did you have any comments on a timeline that you guess?
I'm just thinking about it. It will take a generation. You think about it, they used to issue bearer bonds and then they stopped. I mean, my grandmother used to have bearer bonds. And it wasn't until, she passed and then, all that sort of those investments went to my father, who then, worked with, I think he was working with Dean Witter, E.F. Hutton at the time. And nowadays it's like, I don't ask for a stock certificate. I'm happy to accept a book entry statement. So I think, for people to get familiar with these new types of assets, how they work and such, I think it's going to take a generation.
Although just one quick PS, Will, if you would. I think younger investors are going to drive a lot of this, and particularly in the private market space, because they will have more and more capital available to them over the next decade, and they're already, through some of their online brokers, dictating that their digital assets and their crypto are all in the same wallet. So I mean, the retail side is going to push this as well, and that's going to put pressure on the infrastructure players to actually reform the back end. And I think we didn't really talk about that, but I think that's a dynamic that will be driven by the consumer.
Yeah, absolutely. Absolutely. I mean, it's like anything, right? I mean, Amazon, like you said, didn't go from, originally it was, use paperback books and records, right? And obviously that's not where we're at today. It's changed a little bit, and I think the market continues to evolve, but it takes, like you said, a generation to go from zero to ubiquitous. I think we're at our time. I think we've hit our 50-minute mark. So I want to thank everybody for being on the panel. It was really interesting, and I know we could cover a lot more, and I hope that we get a chance to do this again together, guys. I really do.
It's great.
Yeah, me too. Thank you, everyone. Thanks for having me along.
Thanks all.
Thanks, everybody.
Bye now.
Thanks, everybody.